Hello, my friends. Welcome to the Electric Viking. Fantastic to see you here. Thank you for subscribing. Really appreciate it. There's been so many people lately that I think that pretty much everyone that's watching the videos, well, most of them are subscribing to the channel, and that's fantastic to see. Part of the reason why we're increasing the number of videos we're doing from about 14 per week, so 2 per day, to hopefully 3 per day or 21 per week. That is the goal. And I'm saying this now out loud so that I try to stick to it. If you say it out loud, I think it's easier to achieve a goal, and then people can hold you accountable to it, or at least you hold yourself accountable to it. So that is my goal. There it is. Now, I'm also starting another YouTube channel for another business I have, which is nutrition. So I have an online nutrition store that sells pre-workout, protein powders, all of those kinds of things. And if you're interested, I'll chuck a link in the description below, and you can check out the channel. I've only just started it, so there's only one video there now, but I'm going to try and film more videos for that channel as I'm really trying to build that business up. I really believe in a lot of the products that we sell. Some of them are just things that people want to buy, and so we provide them for sale. But some of them are products that I personally take on a daily basis, and I think that they actually help me with my lifestyle. So far this year, Nio has been doing really well. I was a little bit skeptical about Nio's incredible share price rise. I thought that it was a little preemptive and possibly overvaluing the company. But this year, I think I've been proven wrong over the last few months, and Nio has really started to take off. Sales at the company have been going extremely well. Now, one of the reasons I was skeptical about the company was I'm not convinced that the battery swapping they've been investing in has been the most efficient use of their capital. I understand the concept, and actually the concept is pretty cool. But the question of whether or not that's a good use of their limited capital as a fairly small startup in comparison to their competitors is debatable. Of course, they've built up battery swapping stations all over China, or a fair few around China. They've actually done one in Norway as well. So I'm a bit it's still, I think, is a question of whether or not that will be a good long-term strategy. Short-term, I think it works, because short-term, a lot of cars do have an issue of not having enough range. But I think long-term, that answer will be fairly easily solved for 99% of buyers. So that's why I question why investing now in that technology is the right way to go. That said, I love Nio's vehicles. They are fantastic. What Nio has done as a startup with their vehicles is extremely impressive. And it's something that I believe other car makers are actually looking to Nio to see how can we do things differently. Now, the company's sales have increased year over year significantly over the last few months, but Nio is saying they're not able to keep up with demand, which is a great thing. Well, I think it's a great thing. However, sales of Nio vehicles have actually gone down this month versus the last couple of months, and Nio say that is because of semiconductor shortages. I'm not sure that is 100% true. So that is why this does ring a little bit of an alarm bell for me, because I'm not sure that that would be an issue for a company producing only 6,000 cars in a month. I mean, other companies might produce, say, 200, 300, 400,000 vehicles. So I'm not sure why Nio can't get enough semiconductors for the sale of only, say, 7,000 vehicles. They sold 7,500 last month. This month it's down to 5,900. So is their demand as high as they say? It's very possible. It's very possible that the semiconductor shortage is the reason their sales are down this month versus last month. But I'm not certain that that is 100% accurate. It might be, it might not. Anyway, Nio reported sales of 5,900 electric cars in August, which is up 48% year over year, but it's noticeably less than the past few months. The Chinese company has explained that semiconductor supply chain constraints have limited their manufacturing capability, especially on their ES6 and their EC6 models. Now, this is a big issue because Nio was on the rise, and according to their last update, their order backlog reached an all-time high in August, driven by increasing demand. Hopefully this is true, and Nio will be able to get on top of this issue over the next few months, although I'm not holding out hope because the semiconductor issue is very significant. Sales by model for Nio. ES6 5-seat SUV, 2,342, down 18% year over year. The EC6, the coupe version of the ES6, has sold 1,800 vehicles. That's a new vehicle. The ES8, which is a 7 or 6-seat SUV, sold 1,738 vehicles, and it's up 55% over the same month last year. And that makes for a total of 5,880, up 48% year over year. So far this year, Nio has sold over 55,000 electric cars in China. They've sold 24,000 ES6s, 19,000 EC6s, 12,000 ES8s, for a total of 55,767, and they're up 157% year over year. Now, cumulatively, Nio sold 131,400 electric cars and over 78,000 over the last 12 months. Now, because of these manufacturing constraints, particularly semiconductor constraints, Nio is saying that they're lowering their forecast for the third quarter of this year. In light of the continued uncertainty and volatility of semiconductor supply, the company has prudently adjusted the vehicle production and expects to deliver approximately 22,500 vehicles to 23,500 vehicles in the third quarter of 2021, revised from the previous outlook of 23,000 to 25,000 vehicles. Now, that is only, that's less than a 10% difference in terms of their outlook. So this is why things are not quite adding up for me, because they sold 5,800 vehicles this month, but 7,500 last month. It's a much bigger difference than what they're saying they're going to actually deliver over the third quarter. So if their semiconductor supply constraints are going to make less than a 10% difference in the third quarter, but they've made way more than a 10% difference in this month, things just don't quite add up. However, hopefully this is not real, and this is actually really just from the semiconductor supply constraints, and I'm just reading into this too much. We'll see. Now, this said, guys and girls, 2021 is by far the best year ever for Nio. But I personally think it's extremely important for Nio to be able to increase volume to more than 10,000 units a month as soon as they possibly can, because they really need to become profitable. They're not profitable right now. To become profitable, they need to sell more vehicles. Obviously, there's a limited market for premium vehicles, so Nio is said to be launching a sub-premium, like a lower positioned brand in the market to go after those lower priced car sales. Now, some people are saying that Nio needs their own factory in order to make more cars. Otherwise, they're going to grow too slowly. But apparently, Nio doesn't actually have the intention to build their own cars. They have announced the renewal of their manufacturing arrangement with JAC, which is Chinese state-owned 50%, and Volkswagen owned 50% this year, and they're setting up a JV for operation management with them, which is JAC will own 51% and Nio will own 49%. JAC is also expanding its annual production capacity of Nio's EVs to 240,000 per year. Quote, Nio will be in charge of vehicle development and engineering, supply chain management, manufacturing techniques, and quality management and assurance. Yang Lai will be responsible for parts assembly and operation management. Now, it's interesting because I wasn't aware just how much Nio actually falls under Volkswagen's kind of area of influence, in the sense that Volkswagen own half of the company that actually builds Nio's cars. Now, apparently this is one of the reasons why investors did not like Nio's decision last year. Nio originally was supposed to build its own factory, but they actually cancelled that. Now, people are speculating that it might have been because at the time they didn't have enough money, but obviously they're in a better financial position now. Now, realistically, for their battery swap tech to really take off, they need to be building more cars to make that viable. 7,000 to 8,000 per month, or even as you can see this month, 5,800, is too small to become a leading EV manufacturer by 2025 or even by 2030. Personally, I don't see the company being hugely successful unless they can ramp up their sales numbers significantly year over year. So they need to be doubling these sales numbers in the same month of next year to really be a company that's going to be a big competitor to, say, companies like BYD and Tesla. Thanks for watching the video. I look forward to seeing you on the next one. Bye-bye.